Gentlemen, good day and welcome to Allsec Technologies Limited Q2 FY2024 earnings conference call hosted by IIFL Securities Limited. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need any assistance during the conference call, please signal an operator by pressing star and then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand over the conference over to Mr. Balaji Subramaniam from IIFL Securities Limited.
Thank you, Malcolm. Ladies and gentlemen, good day and thank you for joining us on the post-results conference call of Allsec Technologies Limited. It's my pleasure to introduce the senior management team of Allsec who are here with us today to discuss the results. We have with us Mr. Naozer Dalal, CEO, Mr. Gaurav Mehra, CFO, and Mr. Kushal Maheshwari, Investor Relations. We will begin the call with opening remarks by the management team, and after that we will open the call for a Q&A session. I would now like to hand over the call to Kushal to take the proceedings forward. Thank you, and over to you, Kushal.
Thank you, Balaji. Good evening, everyone, and thank you for joining our Allsec Q2 FY24 earnings call. The information, data, and outlook shared by the management during the call is forward-looking, but subject to prevailing business conditions and government policy. All forward-looking statements are subject to economic growth or other risks faced by the company. The results and the presentation have been uploaded on our website. Please refer to slide number 2 of investor presentation for the safe harbor clause. With that safe harbor, I will now hand over the call to our CEO, Mr. Naozer Dalal, for his opening statement.
Thank you so much, Balaji and Kushal. Good evening, everyone. Thank you for joining our earnings call today and looking forward to interacting with each one of you. For those who don't know me, just a quick introduction. It's been my privilege to lead Allsec over the last 8 months. Prior to this, I've been a part of the banking and process outsourcing industries with experience in excess of 33 years with leading names like Standard Chartered Bank, the Prudential Back Office in India, and the Tata Group, with my immediately just prior role being with our group company, Connect Business Solutions, as its Deputy CEO. I have with me Mr. Gaurav Mehra, Chief Financial Officer, who will twin with me in interacting with yourselves. At the start, I am happy to announce that your company has declared an interim dividend of 45.7 crores, that is rupees 30 per share for the current financial year. Another key highlight for this quarter is that we have rebranded our 2 lines of businesses. The Digital Business Services is now Customer Experience Management, CXM, and Human Resources Operations is Employee Experience Management, EXM. This reflects our value-added role of providing superior experience both to your end customers and employees via our interactions and services. We'll give you a brief business overview, updates covering both our LOBs, and follow it up with the detailed financial performance. Post that, we will be happy to take your questions. So to start with some banner headlines. Quarter 2 FY24 revenues from operations stands at INR 112 crores, up 4.5% quarter-on-quarter and 19.3% year-on-year, driven by growth in both verticals. CXM by 3.9 and 18.3% respectively, and EXM by 5.8 and 21.2% respectively. Our PAT at INR 16.2 crores for the quarter is up 3% year-on-year and 2.3% quarter-on-quarter. We added new employee records in excess of 1.3 lakhs in H1 and now process 1.3 million employee records at the end of September, remaining the clear market leader in the managed services space, continuing to be about 20 to 30% higher than competition volumes. we have added additional seat capacity in Manila, nearly doubling the same. Our staff attrition has been maintained at 8.1% for Q2, which continues to be near best in class in the domestic outsourcing industry. Our cash position and collections continue to be strong. Our collections for Q2 24 were maintained at rupees 111 crores in spite of one-off challenges in the US market collections. I will now provide a progress update on the two tech projects, SmartPay 4 version 4 and the new HRMS we have been working on, being key strategic initiatives. Last 2 quarters, we have been working hard to cross the finishing line, and happy to share that we have capitalized both SP4 and the new HRMS costs as on 30th September. We have completed parallel runs for our upgraded payroll engine, which is the SP4, for a few of our strategic customers, and the results have been encouraging. Phase 1 of our new HRMS platform 2 has passed the milestone of user acceptance testing. We are in the process of drawing up transition plans to migrate our existing customers to SP4 over the next couple of quarters, and will also be approaching the market in H2 to pilot sales of the HRMS platform on a SaaS basis. There were a couple of questions around this in the previous conference call, and this will open up a new market segment for us. Though I would like to state that profitable client acquisition would continue to be a key consideration and would drive our SaaS strategy. We will now move to our new sales achievements. We have signed EXM sales with ACV of INR 17 crores in H1 FY23, which is up about 40% compared to the previous H2 FY23. We have added marquee logos, including targeted conversion of mapped competitor logos, besides focusing on mining of existing accounts, including accounts acquired in FY23. Separately, we will accelerate the focus on international EXM sales for the remainder of this financial year and into FY25. In CXM, we have added 2 new LOBs in the healthcare account, which we had won at the end of the last financial year, has also added 2 new logos in Q2 with an ACV in excess of 5 crores. You'd recollect that in my last call, I had shared 2 key initiatives planned for this financial year in the EXM space. The first being increasing the ticket size of new EXM sales, the second being shortening transition timelines. I'm happy to report that we have made good progress in both of the above goals. Our ticket size of new sales is 2.4x in Q2 as compared to what we were in Q1, which is 46 lakhs in Q2. We also, as I mentioned earlier, transitioned 1.3 lakh payslips in H1 itself, as against 87,000 in the whole of FY23. Additionally, we have embarked on a journey of operational and cost efficiencies earlier in this financial year with focus on the key metric of payslips processed per employee, which has improved by 4.5% year-on-year. All of the above has enabled us to demonstrate an uptick in the EXM segment margins by 2.6% quarter-on-quarter and 1.8% year-on-year for Q2 24. Our CXM margin, though, has got impacted by the delinquency of a US customer under Chapter 11 during this quarter. Adjusting for this, our CXM margin too is about 0.7% higher than the previous quarter. Coming to our operational performance, our meeting of operational KPIs remains strong for both CXM and EXM, including being named as the best partner in some of our customers' league tables. We continue to provide value-added services to our customers, including but not limited to point automations, bundling RPA in our solutions, etc. We again continue to receive high ratings and increasingly positive feedback on social media, Glassdoor, Ambition Box, etc., a direct outcome of our continued focus on employee engagement. We also continue to encourage our employees to participate in the corporate social responsibility activities of the company. With this, I now turn to the detailed financial performance, for which I will ask my colleague Gaurav to brief you on the same. Thank you.
Thank you, Naozer, and good evening to you all. It's a pleasure to connect with you all for H1 earning updates. I will share quarterly and half-yearly financial results. To start with, on the operational revenue. Operational revenue for the quarter is 112.4 crore, a growth of 19.3% year-over-year and 4.5% quarter-over-quarter. We have the growth across both the verticals. CXM vertical grew by 18.3% year-over-year and 3.9% quarter-over-quarter. Our EXM business shown a growth of 21.2% year-over-year and 5.8% quarter-over-quarter. In CXM, management focus is more on the international business, which is the higher margin business. International business grew by the 21.4% year-over-year, and domestic business grew by 11.6% year-over-year. We have a quarterly growth of 4.6% for international business and a 2.1% for domestic business. Within the EXM business, our EXM payroll business grew by 22.5% year-over-year and 8.7% quarter-over-quarter. EXM compliance business, which is more of the statutory compliance, that business grew by the 16.2% year-over-year, and we have seen a softness of 4.5% quarter-over-quarter. Moving to the margin section, our EBITDA for the quarter stands at 25.4 crore, a growth of 17.4% year-over-year and 3.5% quarter-over-quarter. Our margins for the CXM business grew by 8.8% year-over-year and 6.4% quarter-over-quarter. Our margins for EXM business grew by 28.2% year-over-year and 14.7% quarter-over-quarter. Moving to the margins. Our PBT increased by 5.3% year-over-year and 3.9% quarter-over-quarter, and PAT has grown by 2.3% year-over-year and 3% quarter-over-quarter. We have growth across both the verticals. Now I move to the half-yearly results. Revenue for H124 is 220 crore, a growth of 20.6% year-over-year basis. EBITDA for H124 is 50 crore, a growth of 19.3% year-on-year basis. Our PBT grew by 8.5% and PAT grew by 8.4% on year-over-year basis. Our PBT and PAT percentage partially impacted by Chapter 11 delinquencies as had said by now. Moving to the vertical performance, CXM revenue for the H1 is 146 crore, and there is a growth of 24.7% for the international business, which is the higher margin business. Our margins growth, the international business has reading a marginal growth of 18.9% on the year-over-year basis. H124 CXM margin stand at 12.3% for H124 versus 12.7% for the last year. Margins are partially impacted by the Chapter 11 delinquencies. EXM payroll business grew by 19.7% and stat business for the H1 grew by 10.4%. Margin for the H1 EXM Concall business is 32.2%, which is better by the 0.8% on the year-over-year basis. Employee record volumes increased by 12.5% on year-on-year basis. With this all, I conclude the updates on the financial results. I wish you all happy upcoming festival season and wish you in advance with Diwali, Christmas and coming New Year. With this, I pass on to the moderator to take up your query. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Raghuram N. from Eurindia Ventures. Please go ahead.
Yeah. Hi, Nauzar and Gaurav. This is Raghuram here. Just had 3-4 questions. First one, obviously, on the Chapter 11 that has happened this quarter. So, is that if you can just give us some color on that? Is that something that was cooking, and we had some risk mitigation that we had done before, so that this was at least the financial impact was minimal. And if you can also just tell us whether there are any further risks on that count in the coming quarters, or is this something which has already been completely provided for? That was the first question. Second, on there are some observations on the trade receivables and the CXM segment assets going up significantly. For example, segment assets in CXM for this quarter seem to be at about 60 crores versus 50 crores for the previous quarter. And segment liabilities also has significantly increased, nearly 20-25% kind of increase. Employees in the international business has jumped nearly 15%, of 1,553 versus 1,361. And DSO, you have mentioned 81 days. Typically, our DSOs would be in the 50, 52 kind of days. Is this something that suddenly has changed? What exactly is the reason for that? And the last question, I think last quarter or during the Quest call also, they had mentioned Mr. Guruprasad and Pinakikar had mentioned that there was going to be a doubling of the seats in Manila. Now, in your presentation, the latest one, you say 1,500 plus seats. Is this something that's further gotten added to? Because what I could understand was about 1,200 seats. Now, this is a further increase of around 300 seats. So, if you can just please update on that. So, 3 questions.
Sure. Thanks, Raghu. So the Chapter 11 proceedings, did come in early July. It links to one of the mid-size fintech companies we were working with. And thanks for bringing this out. I would have said it in my concluding statements anyway. To recollect, my concluding statements in the last call in May was that that we continue to be a little mindful of the the headwinds, particularly in the U.S. economy and the potential impact on BFSI, because that's where the largest vertical concentration for Allsec is. And we did see that risk crystallizing. To your question of whether we did anything proactive, yes. The moment we sort of came to know about this, we started downsizing our the number of people we work for this very immediately. And we have been very diligent in, both billing and collections, and the client collection record also was, has been extremely pristine. But still, conservatively, we have made 100% provision on this account, And so therefore there should be no residuary impact of this account, in the coming or future quarters. The Chapter 11 proceedings will continue. Administrator has been appointed, and we are giving our inputs to the administrator. And we will, come in line after the secured client creditors and the other secured creditors. On the finance-related questions, I'll sort of hand it over to Gaurav to take them.
Thanks, Naozer. Raghuram, on your two questions, that whether we have factored the delinquencies full risk or whether there is anything to come. So that has already been factored completely into this quarter. Moving to the next question, you said that there is some increase into our receivable part, which is a part of the international business growth which is happening. A large part of our due trade receivables is in the no dues category or within a very close category of our due period, credit period. Our DSO remains same for the quarter over quarter and very close in the year over year. So that is in line to the trend. I hope that addresses your query.
No, and I think it's also 81 days, Raghu, which sort of covers both bill plus unbilled. So maybe you're comparing only one component when you say that earlier you used to see a number at 54. The bill plus unbilled continues to remain at 81, and it's been pretty flat over the last both Q2 FY23 as also Q4 FY23.
So build remains at about 51 days or so.
Yeah, in that same ballpark, yes.
Okay. Just the last question on the employees' growth and the seats in Manila.
Yeah, so I'm not too sure where you're seeing that 1,500 seats, but it pretty much is consistent with what Mr. Guru Prasad and Mr. Kar would have told you. So the operational seats have, are just under 1,200. And which has gone up from 600. If you've seen another number, I'm not sure where that is coming from. But yes, I mean, that includes... Okay, that includes your non-operation seats also, the support seats.
Yeah.
Okay.
That's part of our investor deck.
Okay. So
completely consistent. Yeah. So there is no further growth from what we had already announced, both in our projected growth in our earlier call and the first call which you mentioned.
Okay. So the employees in the international business is in line with what you had mentioned. That's what you mentioned. Okay. Thank you so much.
Thank you.
Thank you very much. A gentle reminder to all the participants, you may press star and 1 to ask a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. A reminder to all the participants, you may press star and 1 to ask a question. Our next question is from the line of Guneet Singh from Counter Cyclical PMS. Please go ahead, sir.
Hi, sir. So, what is the outlook for H2 FY24 in terms of top line and bottom line? I mean, will we be able to improve significantly over a performance in this quarter, or what do we expect? And also, what kind of growth are we looking at in FY25? And what are the main growth drivers in future?
Guneet, as you would appreciate, we do not release, precise financial numbers in terms of, future guidance. But what I can state and assure is that we'll continue on the path which we set for ourselves, in March, April this year. which is primarily, incremental sales. Within sales, focus on the international business. Continue to look at operational efficiencies very closely. Continue to look at operational service excellence very closely because that helps us retain and, mine existing customers. And the last bit is, of course, as we had committed, our platform and tech upgrades, which we have completed, in September and, are ready to sort of go to market, particularly on the HRMS side. And that should hold us in good stead for the remainder of this financial year and into FY25 also.
All right. That's all from my side. Thank you.
Thank you. Thank you.
Thank you very much. The next question is from Raghuram and is from Urinda Ventures. Please go ahead.
Yeah, sorry to be back again. I just had one more question which I left out. Obviously, Naozer, you mentioned that both SP4 and the HRMS platform has now been capitalized and it's no longer under the WIP kind of thing. So if you can give us some guidance on how the depreciation numbers will forward in the next couple of quarters and what will be the kind of increase that we will have to provide for in our workings.
Raghu, we are still going through a technical evaluation in terms of both the useful life of the asset and keeping market benchmarks and feedback in mind for similar kind of assets. As I mentioned, we only capitalized it on 30th September, so we have not completed that process. And of course, consultations and consensus with the statutory auditors would be a key part of that process. So unfortunately, not able to give you a precise number at this point. And I think we'll have to wait it out, till we announce the Q3 results in January, unfortunately.
Okay, so that's something that at some point of time we will get to know later.
Yeah, as I said, you will get to know when we announce the Q3 results in the month of January 24.
Okay. And just one more question on the sales. The EXM sales have been clearly significantly higher than what it used to be in the previous year. So is this something that is indicative of the kind of momentum being kept up? Last year we ended with about nearly 17 to 18% growth. So taking into account the ACVs, which are literally about 100% kind of up YOY. So is this an indicative of the kind of growth that we will end up for the financial year?
Yeah, so last year, the full year ACV was about 25-26 crores in terms of what we did for EXM sales.
Oh.
And, we definitely will look to exceed that number this year. What I can confirm is that, yes, we have definitely increased the sales rigor. We have increased, the channels who we work with, the channel partners who we work with, particularly on the international side. What we have also done is, looked at augmenting our sales capacity. So we are actually getting into a planning phase for FY25 where you will see where we need to augment our sales capacity both locally and internationally. So yes, I can definitely confirm that the rigor will continue and, with that, the growth which we have seen, it should continue and we will definitely end the full year, better than where we were in FY23.
Okay. Just a related question to that. Obviously, international sales is something that you guys have mentioned crossed 50% of total new sales. So is this something that's a clear trend which will continue into the near future, or is this something that's a one-off kind of thing?
No, focus, as I mentioned in my response to the earlier question also was that focus on international sales, equally in EXM, whilst, on CXM, of course, we focus only on international as part of a strategic call. But focus on international sales in the EXM also has been identified as one of the strategic initiatives earlier this year and will definitely continue to FY25 also, where we'll want to continue to look at, working with our existing customers into sort of the newer geographies where they operate as a first step. Then looking with existing customers and, start building capabilities in some of the newer geographies. And then, of course, newer customers in newer geographies, so that continuum has been planned. And, we'll continue to sort of focus on international sales, for EXM also.
Okay. Any update on the acquisition side now, sir? Obviously, you guys have given out an interim dividend. And I still can see that the cash and liquid funds are about 151 crores as given in your PPT. So we are still, even after the 47.5, nearly 47.5 crore payout, which will happen over the next, 40 days or 50 days, we'll still be left with more than 100 crores. Is that something that you believe is going to be a working factor for you going into this couple of quarters, or is that something that you believe is not so much on the
No, I think I said last time, acquisition for niche skills, acquisition for niche vertical, acquisition for certain geographic presence, in the US. Those are some of these strategic drivers which continue to look at it. We continue to look at opportunities both in CXM and EXM, but there is nothing concrete on the table at the moment. Yeah.
Okay. So this 100 crores will continue to, you believe that that's a good number to have. That's something that I wanted to just check. It's a pretty significant number from a perspective of our overall balance sheet size. It does impact the return percentages also significantly on the downside because we have such a large cash balance. So is this something that you believe is something that you will be able to carry it forward going forward?
No, we continue to evaluate, the most optimum use of the cash, whether it's maximizing the internal returns from cash, whether investing in newer capabilities, organically. As I had mentioned, inorganic also is an option on the table. So, the dividend which has been declared yesterday, continues to strive to balance all of these factors, besides working on a sustainable dividend policy, which I've also mentioned. So we continue to evaluate this, every quarter, when an opportunity gets provided. And we continue to be on this journey, in terms of constant evaluation, balancing out inorganic, possibly organic, and, maximizing the returns, within the, current available investment policies.
Just to add one point to that, like that out of this 100 crore, 45 crore, 46 crore is invested in terms of a mutual fund, which is kind of giving some reasonable return on the investment.
Okay. And how much of this would be sitting in Manila?
Not handy with me, Raghuram. We can get back to you on that particular.
I ask that because obviously when you bring that back, there will be a withholding tax impact. So that is something that has been a bit of a one-time phenomenon that happens. So I was just wondering what should be provided for from our calculation perspective. That's all.
All right. Thanks, Raghu. Noted.
Thank you so much. All the best, guys. Yeah.
Thank you.
Thank you very much. A gentle reminder to all the participants, you may press star and then 1 to ask a question. As there are no further questions from the participants, I now hand the conference over to the management for the closing comments.
Thank you so much. I would like to thank all of you for the time that you've given us today. and for supporting us over the years by being invested in our journey. We are at a good trajectory in our journey and are well poised to capitalize on both the market opportunity as also some of the investments we have made in people, process, and technology over the past few years. We continue to monitor our risks closely, and also before closing, I would like to wish each of you and your dear ones best wishes for the festive season, which will soon be upon us, starting with Diwali and leading up to Christmas and New Year. With this, we would like to close the call and look forward to interacting with all of you sometime again in the near future. Thank you so much.
Thank you.
Thank you. On behalf of IIFL Securities Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.